All right, welcome to a deep dive. We're getting into the analysis that's really shaping the stock market right now.
Yeah, we've got a whole stack of sources here. Research, articles, some notes, all really focused on the outlook, the tactical moves for today, June 10th, and looking into tomorrow, June 11th, 2025.
And our mission really is to try and cut through all the noise for you.
Exactly. We're here to pull out the most important bits, make sense of the signals, even when they seem to conflict, and help you understand what's really driving potential market moves over, say, the next 24 to 48 hours.
Think of this as your shortcut.
Your shortcut to knowing what matters most in the market today and tomorrow.
Yeah. Okay, so let's maybe zoom out for a second before we get into the nitty-gritty headlines. What's the general feeling? What's the main current in the market as we kick off the week?
Well, the overall tone is cautiously optimistic, and it's a big but, there's a major caveat. We've had some okay recent data. The job market numbers were positive, and there are these little glimmers, maybe, of progress on U.S.-China trade talks.
Right, I saw that.
But honestly, almost everything is just being overshadowed by this anticipation for the key economic data that's coming later this week.
Yeah, the big numbers everyone's glued to. Which data points are really the pivotal ones right now?
The undisputed headliner, no question, is the Consumer Price Index, CPI, for May. That report lands tomorrow, Wednesday, June 11th, 12:03 p.m. Eastern Time.
Okay, tomorrow afternoon. And what's the market expecting?
So the market's laser focused on the consensus numbers. For core CPI, that's expected to take up just a bit, month over month, to 0.3% from 0.2%. That would push the year-over-year figure to 2.9% from 2.8%.
Got it. And headline CPI?
Headline CPI, they're seeing it holding steady at 0.2% month over month, but that would mean it rises to 2.5% year over year, up from 2.3%.
And CPI isn't the only inflation signal we're getting, is it?
Correct. We also get the Producer Price Index, PPI, for May. That follows on Thursday, June 12th. Consensus there expects a pretty modest 0.1% rise month over month for headline PPI. That's after it actually dipped minus 0.5% before. And core PPI is seen slightly negative again at minus 0.1% versus minus 0.4%.
So these aren't just abstract numbers flashing on a screen. Why do these specific reports right now carry so much weight for the market?
Because they are absolutely pivotal. Pivotal for Federal Reserve policy expectations. I mean, the market lives and breathes the question of when or even if the Fed's going to cut interest rates.
And right, it's all about the Fed.
Totally. Any deviation from these consensus inflation figures, especially if they come in hotter than expected, can drastically shift those rate cut expectations. And that causes, significant market volatility. The Fed's been super clear they remain data dependent. Remember back in April, New York Fed President John Williams said they're still not at our 2% goal.
Yeah, I remember that.
Well, these CPI and PPI reports are direct measures of how much progress, or maybe lack of progress, we're making towards that goal.
Yeah.
And the market reacts instantly, pricing in what it thinks the Fed will do next.
That makes total sense. The market's basically trying to front run the Fed. So, okay, with that massive CPI report looming tomorrow afternoon, how does the analysis see the market behaving, like today and early tomorrow morning, before that data hits? What are the likely scenarios playing out right now?
Yeah, okay. So based on the sources, there are a couple of pretty high probability scenarios for this immediate 24-hour window, basically trading into the CPI release.
What's the most likely path the analysis sees?
Scenario one, and this gets about a 60% probability, is what they're calling cautious consolidation with an upward bias.
Okay, explain that.
The logic is you've got some recent positive news, the job numbers, those little positive whispers on U.S.-China trade, providing a sort of underlying positive tone.
Right.
However, with the big indexes like the S&P 500 flirting with 6,000 and the Nasdaq getting close to 20,000, traders are pretty hesitant to make huge directional bets right before seeing that CPI data.
So choppy action.
Yeah, exactly. You're likely to see choppy kind of range-bound action, like the market is just holding its breath.
Holding its breath, yeah.
Minor dips might see some buyers step in, but big breakouts are probably tough to sustain right now. So the directional bias is, slightly bullish to maybe neutral.
Okay, that makes sense. What's the next most probable scenario then?
That's scenario two, given about a 30% probability. Pre-CPI jitters and profit-taking.
Ah, okay. So some selling maybe.
Yeah, this scenario acknowledges that the recent market run, especially in the Nasdaq, is looking maybe a bit stretched technically. Some indicators like the RSI, the Relative Strength Index, are hinting it might be overbought.
Right.
So if that underlying fear of, sticky inflation starts to outweigh the recent optimism, especially from these high levels, you could see some precautionary selling, people taking profits off the table.
Which would mean testing some support levels.
Precisely. That gives it a mildly bearish bias. And then, of course, there's always scenario 3, low probability, maybe 10%, an unexpected catalyst.
Right, the curveball.
Something out of the blue that just hits the market suddenly.
Yeah.
Always a possibility.
Always got to be ready for that. Okay, so that's the big macro theme everyone's basically waiting for tomorrow's data. But while we wait, there are specific headlines and events happening, like today, that are definitely moving individual stocks and tweaking sentiment. What's the fresh news filtering system, as the analysis calls it, flagging right now?
Yeah, a few key things have definitely popped up. First, those U.S.-China trade talks you mentioned. There were reports about top delegates meet in London and some talk of positive development.
Okay, but we've heard this kind of thing before, right? How much does this really move the needle for the market these days?
You're spot on. The market is somewhat, maybe, desensitized. It's good news in the sense that it reduces that tail risk, the fear of a major trade war flaring up again.
Right, less worst case scenario.
Exactly. But for a sustained impact, we really need concrete outcomes, not just reports of meetings. So, yeah, it helps sentiment a bit, but probably not a major directional driver on its own right now.
Okay. What else is fresh and getting attention today?
Okay, this is a big one. But on the micro level, after the market closes today, GameStop, GME, reports its Q1 earnings.
Oh, GameStop earnings. That's always an event.
It's huge for that stock, yeah. And get this. The options market is pricing in a potential move of around 11% up or down after that report hits tonight.
Wow, an 11% swing priced in. That's enormous for one stock. Is that just a GME phenomenon, or could it, spill over?
It's mostly a GME thing, really driven by its, let's say, unique and speculative nature. But given the stock's history, the whole retail trading community around it, yeah, a big surprise, positive or negative, could definitely spill over into sentiment for other so-called meme styles or other heavily shorted names. It's kind of a pulse check on that whole corner of the market.
Interesting. Okay, what about the giants? Apple, AAPL, they've got their big conference happening.
Yeah, Apple's Worldwide Developers Conference, WWDC, started Sunday. And the major focus, no surprise, is AI. How are they going to integrate it? What's the plan?
And how's the market reacting so far?
Well, the sources described the initial reaction to the main keynote presentation as a bit muted.
Muted. Not exactly what Apple wants to hear.
Probably not. It suggests investors are maybe still waiting for more concrete details, or perhaps they just weren't totally blown away by the initial announcements. But there are more detailed sessions happening today, so the market's watching really closely for their specific AI strategy, how they plan to roll it out.
So the jury's still out on Apple's big AI push this week, and today's important for that narrative.
Exactly. It's really critical for Apple's future growth story and how they position themselves against the competition in this whole AI race.
Got it. Are there any other company-specific events happening today that the analysis is highlighting?
Yes, 2 CEO presentations were noted. First, Navitas Semiconductor, NVTS. Their CEO was presenting at 10:00 Eastern Time this morning.
Navitas. They had that big NVIDIA news recently.
Exactly. So this presentation was seen as a follow-up. The market was looking for more details on that NVIDIA collaboration, maybe updates on commercial shipments. It's a really key event for potentially sustaining that stock's huge recent momentum.
Right. That partnership is a massive deal for them. And you said there was another CEO presentation.
Yeah, BOS, Better Online Solutions, ticker BOSC. Their CEO presented earlier at 9:00 a.m. Eastern. But the analysis flags this one as probably only relevant for microcap investors, unlikely to have any broad market impact. Good context to have.
Yeah, good distinction. Okay, and before we dive into the individual stocks, you mentioned those big round numbers for the indexes, S&P 500 and Nasdaq. Are there specific levels the analysis points to as key focal points right now?
Definitely. The S&P 500 is right there, hovering around that major psychological 6,000 mark.
6,000, wow.
The Nasdaq Composite is basically knocking on the door of 20,000 points.
20,000.
And these aren't just random numbers, right? They act as significant psychological barriers, sometimes support zones. Price action around these big round numbers often gets amplified because traders react emotionally to hitting them or failing to hold them. They become real focal points.
Focal points for volatility. Makes sense. Okay, we've got the macro picture basically, waiting for CPI. We've got the immediate catalysts, earnings, presentations, trade talk whispers, WWDC. and the key index levels. Now let's do that deep dive into the specific stocks the analysis focused on. Apple, NVDA, Palantir, Navitas, and GameStop. For each one, what are the most interesting or maybe even conflicting points the analysis is finding when it looks across, technicals, quant data, sentiment, the event drivers?
Okay, let's kick off with Apple, AAPL. As we said, the relevance is all about WWDC, the AI strategy. Now, the analytical hook here is this really fascinating technical conflict that the sources point out.
Oh, what's the conflict?
Okay, so services like TradingView, they show the oscillators, which are short-term momentum indicators giving a buy signal, suggest maybe some positive short-term momentum. But the moving averages, which look at the trend over longer periods, are apparently screaming strong sell.
Okay, that is a head-scratcher. Oscillators say buy, moving averages say strong sell. How does the analysis even interpret that kind of disagreement?
It's pretty classic market indecision, actually. You often see this right before a major, potentially game-changing event like WWDC is for Apple right now. The analysis basically suggests it's a battle playing out, short-term bounces versus a potentially weaker underlying trend. It really highlights the uncertainty hanging over the stock.
And what about the sentiment around Apple's AI right now? You said the keynote was muted.
Yeah, it's a real mix. There's hope that Apple will pull a rabbit out of the hat, reveal something truly groundbreaking that justifies its valuation and reignites growth. But there's also this fear, or maybe skepticism, that they might be seen as playing catch-up in the AI race.
So investors are waiting for proof.
Pretty much. They're reserving judgment until they see more concrete details maybe later today. Key levels to watch. The recent range is roughly support down at 193 cents, then that really key psychological $200 level. Resistance is maybe up around $212.50.
Any quick quantitative points on Apple? Anything stand out?
Not really dramatically. Short interest is super low, less than 1%, so short squeeze isn't really a factor here. Options trading shows a slight bullish bias, a bit more call volume than put volume, but it's not extreme. And institutional ownership is high, around 70%, which is typical for Apple.
Okay, next up.
Yeah.
NVDA, the absolute powerhouse of AI hardware.
Yeah, NVIDIA's relevance is just undeniable right now. It's the linchpin of this whole AI theme. Now, the analytical hook for NVDA is different. It's the relentless technical strength. The stock's in a powerful uptrend near all-time highs. But
there's always a but.
There's always a but. The analysis does note that the Nasdaq index itself, which NVDA heavily influences, is looking technically overbought based on its RSI being above 70.
Okay, so the stock itself is strong, but the broader index it dominates might be running a bit too hot. That sounds like a potential conflict. How does the analysis weigh that one?
This is interesting. The analysis points to the overwhelming sentiment, which is still incredibly bullish for NVIDIA, and, maybe more importantly, concrete evidence of institutional conviction.
How do they see that conviction?
Quant data shows significant institutional bullish options flow. The source material specifically highlighted a massive block trade, 17,000 call contracts, bought at the $149 strike, expiring this Thursday.
Wow, 17,000 contracts. That's a big bet.
It's a huge bet. It suggests big players are actively betting on further upside, despite any minor overbought signals on the index. The belief seems to be that this powerful AI narrative and that strong institutional buying power are likely to supersede any short-term technical caution, at least for now.
That's a key insight. Seeing where the big money is flowing can sometimes override those standard technical warnings. What are the key levels for NVDA then?
It's trading right near its recent high, around $142.83. Resistance is naturally at that prior high, around $153.13. Support levels are seen down at $140, and then maybe $135 if things pull back more. Short interest is low, just 1%. And that high institutional ownership just reinforces the conviction story.
Makes sense. Okay, Palantir, PLTR, they're focused on the enterprise AI software side.
Yeah, Palantir has definitely got strong momentum in the enterprise AI space right now. The analytical hook here is technical again, but different from Apple's conflict. For PLTR, the moving averages show a strong buy, confirming a solid uptrend. But the oscillators, those short-term momentum gauges, are reading neutral.
Okay, so the longer-term trend is clearly up, but the short-term momentum is pausing. What does that usually tell us?
The analysis interprets this neutral oscillator reading not really as a warning sign, but more likely as a healthy pause within that strong uptrend. The stock's had a really good run, and a period where it just kind of consolidates or catches its breath is pretty normal, maybe even constructive, before potentially moving higher again.
So not necessarily bearish, just consolidating.
Exactly. And sentiment around Palantir is still strongly bullish. There's a lot of FOMO, fear of missing out. It's got that AI darling status, and CEO Alex Karp's public comments also tend to be pretty influential on sentiment.
Right. Any interesting quant data for Palantir?
Yeah, a couple of things. Short interest is moderate, around 4.4%, but critically, the S3 Partners squeeze score is high, 82.5.
Okay, remind us, what does a squeeze score of 82.5 mean in plain English?
It means the short sellers in Palantir are feeling some serious heat. And 82.5 is very high on their scale, basically indicating that if the price keeps pushing up, those shorts are increasingly vulnerable. They might be forced to buy shares back just to cut their losses, and that buying can actually accelerate the upward move. It feeds on itself.
Got it. A potential squeeze setup.
Potential, yeah. And options volume also shows a bullish skew, with call options making up over 61% of the recent trading volume. Institutional ownership is around 50%.
Okay, now Navitas Semiconductor, NVTS, this is the one that's been moving like crazy on that NVIDIA news.
Absolutely.
Yeah.
Navitas' relevance just exploded recently because of that, what the analysis calls transformative collaboration with NVIDIA. And the analytical hook is just the sheer force of the move yesterday. The technicals are described as extremely bullish.
Oh, stream.
We saw a truly massive volume surge, traded 127 million shares yesterday. Its average daily volume is usually around 24 million.
Whoa, 127 million shares. That's insane volume.
It's astounding. And it hit a new 52-week high yesterday, $7.54. Now, its RSI is getting up there, approaching overbought territory around 67, but honestly, the volume and the positive momentum are just overwhelming right now.
So what's the sentiment like for Navitas? Is it just pure euphoria?
It's characterized by extreme optimism, a lot of excitement. It's being framed as this kind of David and Goliath story, a smaller company landing this huge validation from the AI giant, NVIDIA.
Right.
And that high short interest just adds fuel to the fire. There's a definite short squeeze narrative playing out, maybe even a bit of satisfaction among longs seeing the shorts potentially getting squeezed here.
And just how high is that short interest figure?
The sources cited between 12.8% and 16.81%. That is high, objectively high. Makes it very ripe for a squeeze if the positive catalysts keep coming, like potentially positive news from that CEO presentation today. Options open interest is also heavily concentrated in bullish call options at lower strikes, like the $5, $6, $7 strikes, reflecting a lot of speculative bets on further upside. Institutional ownership is around 42% and apparently has been increasing lately.
Okay, last one. GameStop, GME. Always a stock that generates headlines. And the major event is today, after the close.
Yes, for GME, that Q1 earnings report tonight is everything. The analytical hook here is really that the price is often just completely detached from traditional fundamentals, and it's incredibly volatile. And guess what? Technical signals are conflicted here, too.
Of course they are. What's the conflict for GME?
Well, there's a recent golden cross pattern formed, which is generally seen as a bullish, long-term technical signal.
Okay, remind us what a golden cross is, simply put.
Sure, it's just when a shorter-term moving average, typically the 50-day, crosses above a longer-term moving average, like the 200-day. Technicians often interpret that as signaling a potential shift towards a longer-term uptrend.
Okay, so bullish, long-term signal. What's the conflict?
But conflicting directly with that, the daily oscillators, those short-term momentum things, are actually giving a sell signal right now, suggesting potential short-term overbought conditions right before these crucial earnings.
So the long-term technical signal looks maybe okay, but the short-term momentum indicators are flashing caution just hours before the big event. Classic GME.
Exactly. And the sentiment. Forget fundamentals. It's highly polarized, totally driven by speculation, community platforms like Wall Street Bets, maybe the lingering influence of figures like Roaring Kitty, even if he's not actively posting right now. It's much less about earnings per share and more about event trading, community dynamics narratives.
Right. What levels are key for GME?
The analysis points to a recent horizontal channel it's been trading in, roughly between $21.62 and $35.15. Resistance is seen near the top of that, around $35.81. Support might be found around 28 TERS, and also near its 50-day moving average.
And the quant picture for GME, still heavily shorted.
Oh yeah, very high short interest, reported over 12%. And importantly, a high days to cover, figure 8.57 days.
What does days to cover tell us again?
It's an estimate of how many days, based on average trading volume, it would take for all the short sellers to buy back the shares they've borrowed. A high number like 8.57 days means it could take a long time, potentially amplifying a squeeze if buying pressure suddenly surges, because shorts can't all get out quickly.
Got it. Squeeze potential remains high.
Definitely. And as we said earlier, the options market is pricing in about an 11% move either way after the earnings report tonight. Expect absolutely massive volume around that report.
Okay, wow, that's a lot of really distinct situations. And like you said, quite a few conflicting signals even within some of these stocks. How does the analysis try to make sense of these diverging viewpoints? How does it decide what to prioritize?
Yeah, this is really where the analysis tries to, cut through that noise. It prioritizes the signals based largely on context and immediacy. So take Apple, with those clashing technicals and that cautious pre-WWDC sentiment. The resolution there is pretty clear-cut. According to the analysis, it depends entirely on the WWDC outcomes today.
So you can't really call it beforehand.
Exactly. You have to monitor the real-time reaction to those detailed AI announcements later today. Confidence in any directional call before that news hits is rated only medium, simply because the event itself is the overwhelming factor.
Okay. What about for NVDA, that bullish trend versus the overbought index concerns?
The analysis resolves that by basically saying the powerful AI narrative, combined with those tangible institutional buying signals we saw in the options market, likely outweigh those minor technical overbought indicators on the Nasdaq, at least in the immediate term. So the conviction there is rated high, bullish.
And Palantir, bullish trend, but those neutral oscillators.
Here, those neutral oscillators aren't really seen as a major conflict. They're interpreted more like a healthy pause or consolidation phase within an already established strong uptrend. So the analysis resolves this with high conviction bullish as well.
Okay. Navitas, extreme bullishness, but also maybe overbought risk, plus that high short interest.
Right. The analysis resolves this one very bullishly, but with an important caveat. That powerful NVIDIA catalyst combined with a very high short interest strongly favors continued upward momentum. But that's contingent on the CEO presentation today, reinforcing the positive news. If that went well, the bias remains up.
But if the presentation disappointed,
Then you can see quick profit taking. So the confidence is rated very high, bullish, but acknowledging it's going to be highly volatile. Big potential swings either way based on follow-through news.
and GameStop, the ultimate conflicting signal right before earnings.
Yeah, for GME pre-earnings, the analysis basically says it's impossible to resolve the direction. The signals conflict too much, and the earnings event is absolutely everything. Confidence in making a directional call before that report comes out is rated very low.
But high confidence and volatility.
Exactly. Confidence is high that it will move significantly, just not which way.
Okay, so you see, the analysis isn't just ignoring the conflicts. It's trying to understand why they exist, like pre-event uncertainty for Apple, and then figuring out which signal probably carries more weight right now, like that institutional flow for NVIDIA or the specific catalyst for Navitas.
Yeah, that framework definitely helps clarify how to think about it. So bringing all this analysis together then, what does it suggest for a potential action plan? What are the key levels to watch, the scenarios for trading today and into tomorrow, Juneteenth and 11th?
Right. The sources actually lay out some potential scenarios and trigger levels for each stock. For Apple, again, it's all about WWDC today. If it's seen positively, a bullish trigger could be a break above $205, maybe targeting $212.50. But if it disappoints, a break below $200 could target down towards $193.
Okay.
NVIDIA, the bullish trigger is seen as a push above $143.50, targeting $150 first, then maybe that prior high around $153.13. A bearish trigger, maybe if the whole market pulls back on inflation fears, could be a break below $140, potentially targeting $135. Palantir. Bullish trigger is a break above $133, targeting $140. Bearish trigger is seen as a break below $129, targeting $123. Pretty tight ranges there.
And Nvidia's riding that NVIDIA wave, and depending on the CEO talk.
Yeah, this one's watching that $7.54 high from yesterday very closely and hinges on that CEO presentation outcome. A bullish trigger is seen as a break above $7.60, targeting maybe $8.50, potentially even $9.50 if the news flow stays strongly positive.
But the risk.
But yeah, be warned, a break below $7 could signal that profit-taking is kicking in, maybe targeting $6.20 or even $5.50. The analysis actually gives that bullish scenario a 70% probability, but really emphasizes the volatility, high risk, high potential reward.
Got it. And GME. But this is for after earnings tonight, right? For trading tomorrow.
Exactly. Crucial distinction. The analysis for GME is about trading the reaction tomorrow morning, June 11th. A potential bullish trigger would be if it gaps up tomorrow and manages to hold above $33, then it might target that $35.81 resistance.
Then the bearish case.
A bearish trigger would be a gap down tomorrow, holding below $28, potentially targeting $25. Interestingly, the analysis assigns a slightly higher probability, 60%, to the bearish reaction here, but again, this is pure speculation after tonight's report.
Yeah, and a really crucial takeaway from the analysis across all these is risk management, right?
Absolutely paramount. Position sizing needs to be super careful, especially in those highly volatile names like Navitas and obviously GameStop. Using stop losses is considered essential.
Okay, let's maybe go even one level deeper. Beyond these specific triggers and levels, what are some of the maybe second-order effects or broader strategic insights we can pull from all this analysis? What are the ripples?
Yeah, that's a good question. One big one is how tomorrow's CPI data could potentially influence that rotation between growth stocks and value stocks.
Ah, okay. How so?
Well, if inflation comes in particularly hot, especially in certain components that really worry the Fed, you could see investors temporarily rotate out of those high-flying, high-valuation growth names like maybe NVDA, Palantir, and into more defensive or traditional value-oriented sectors, even if the overall market just kind of treads water or dips slightly. It depends on the composition of the inflation.
So it's not just if inflation is sticky, but what kind of sticky inflation it is, and how the market thinks the Fed will specifically react to that kind.
Precisely. Another interesting ripple effect to watch is the fallout from the GME earnings tonight.
Right, how that might affect broader retail sentiment.
Exactly. A big beat or a big miss could significantly swing how retail traders are feeling and behaving. If it's surprisingly positive, maybe you see a bump in speculative activity elsewhere. If it's really negative, it might cool things down in that space for a bit. Watching the post-earnings chatter in retail trading forums could be a useful, albeit noisy, pulse check.
What about the deeper insight from that Navitas-NVIDIA partnership? What's the theme there?
This really highlights a growing theme in the AI infrastructure build-out. The critical role of advanced power semiconductors, things like gallium nitride, JNATOM, and silicon carbide, in which Navitas specializes in.
So it's not just about the main AI chips, the GPUs.
Right. It's also about the underlying power efficiency and management needed for these massive AI data centers. This Navitas deal puts a spotlight on that. It could draw more investor attention to other companies playing in that GaNSiC power semi-space, like maybe Onan Semiconductor, for example. It signals an emerging subsector theme that's worth watching closely.
Interesting. And for Apple's AI strategy, what are the longer-term ripples there, beyond just the stock price this week?
Well, beyond the immediate stock reaction, the success, or even just the perceived success, of Apple's AI strategy and how well developers adopt it, that could significantly impact future iPhone sales cycles, their App Store revenue, and the overall strength of their whole services ecosystem for years down the road. This week's developments, how they're received, could be pretty foundational for that long-term picture.
Makes sense. The analysis also seemed to kind of rank the different setups based on conviction level. How did that shake out in the end?
Yeah, it did. Based on how well the signals seem to align and the strength of the catalyst, the analysis ranked the NVTS bullish setup as highest conviction. That's because of the potentially transformative NVIDIA partnership plus that high short squeeze potential, but again, acknowledging the extreme volatility.
Okay. Highest conviction but volatile. What was high conviction?
High conviction went to PLTR, bullish, strong momentum, it looks like a healthy pause, and also NVDA bullish, the clear AI leader with strong institutional backing showing up.
At Apple.
Apple was ranked as event-dependent higher risk. It's just entirely reliant on how WWDC is received today and tomorrow.
And GameStop.
Predictably highest risk, purely speculative, really focused on just trading the post-earnings reaction tomorrow and managing risk incredibly tightly if you do.
So, boiling it all down, what's the actionable takeaway from this deep dive?
I think it's this. Prioritize the setups where you see alignment, where the technical picture, the fundamental catalyst, and maybe the sentiment all seem to point the same way. Always, always manage your risk meticulously, especially with these event-driven stocks or the ones with high short interest. That means thinking carefully about position sizing and definitely using stop losses.
And stay nimble.
Absolutely. Be agile. Be ready to adapt quickly to new information as it comes in, especially from Apple's WWDC today and GME's earnings tonight. And, of course, keep a very close eye on that crucial CPI report landing tomorrow afternoon.
Okay, that was a pretty thorough deep dive into the market analysis for Juneteenth and 11th, really pulling the key insights directly from that source material we had.
Yeah.
We've looked at the macro forces, which are just dominated by tomorrow's CPI data right now.
Yep, and we examined the immediate catalyst for key stocks like Apple, NVDA, Palantir, Navitas, and GameStop. We tried to clarify how the analysis approaches those conflicting signals we found.
And mapped out some potential scenarios and levels to watch. So as the market tries to balance these specific company promises, these catalysts, against that big cloud of uncertainty from tomorrow's inflation data, how will you interpret the signals coming in? How do you make informed decisions in this environment?
Yeah, which of these narratives really resonates most with your own view of the market right now? Is it the unstoppable AI trend, the potential short squeeze plays, the event-driven gamble on earnings, or just the macro data wait-and-see approach?
Lots to think about. This is the kind of focused analysis we try to do, helping you cut through the noise and stay informed when things are developing fast.
Exactly. So for the fastest and most frequent updates on market dynamics and these kinds of key deep dives, make sure you subscribe.